Good evening, everyone. This is Matt with Newbie-Trader.com. Welcome, and appreciate you taking some time out of your busy schedules to join us here this evening. I hope we provide you with a lot of great information and give you a look into our systems and tools we use over at Newbie-Trader.com. Want to go over a few things before we get started here in relationship to some disclaimers and things like that. Trading futures is risky business, and you can lose more money than you have in any future account, and the risk involved is not suitable for every investor, and that's because we are using a leveraged instrument, and you can put yourself in harm's way if you don't understand the risk associated with it. So it is risky, and I want you to understand that this is not child's play. It is something that is very serious. We take it very serious, and everything that I'm going to show you here today is based off of historical data, and it's for educational purposes only. And I want you to understand that past performance is not indicative of future results. All right. So the title that I sent out that invited most of you to this webinar was the top 5 trading mistakes made by newbies. And I've been teaching folks how to trade the futures markets going on about 8 years now, and I've been running a live room, and I've seen traders come and go. And the main problem that I see are problems that can be fixed and avoided. And so what we've done is we tried to take our experience over the years and put it into a tool that would help eliminate some of these common mistakes that can be avoided. So I want to walk through some of these mistakes first before we get into the heart of the tool and what it can do for you. And you know, the first thing we need to talk about, and you know, trading is just like any other business. 90% of all businesses fail in their first 5 years. And that goes for the mom and pop shops, the brick and mortars that are in your town, and it also goes for trading. Those same percentages hold true. And the difference that separates the businesses that have success from a brick and mortar standpoint and the trading businesses that have success are common and related. And just like people should go into business, they should be well capitalized, well funded, have a business plan, have a marketing plan, etc. The same thing needs to happen in your trading business. You need to be well capitalized, you need to have a trading plan, you need to have you know, an approach to the market, and you need to have rules that you operate your business by. So there are definitely commonalities between the two, but tonight we're going to focus on trading as a business. We want to talk about these mistakes and get them out there in front of you, and then talk about what we can do to correct or to stop those type of things from happening. So these 5 things that I'm going over, I'm going to be on the website. I have a paper that I actually talk about the top 10, and there's really about 15, but and we'll get some more documentation in your hands about those in the coming weeks. But I'm going to talk about the top 5, and these are in no particular order, but they are definitely among the top 5 trading mistakes. And first is, obviously, no objective reason to trade. Traders should be using high probability trading plan that has a specific, repeatable entry, exits, and stops. A successful trading plan usually is repeatable across multiple markets and time frames. It should be thoroughly back-tested prior to implementation. Just as a business should not operate without a business plan, a trader should not enter a trade without a trading plan. Entering a trade outside of the rule sets defined in the trading plan would be the equivalent of gambling. Next, let's move on to no stop order or letting losers run. And I'm sure a lot of people on this webinar can relate to this. You've been in a situation where you've been in a trade, and it might have happened early in your trading career, or it might have been something you did today. But you put on an order, and you had a defined area where you were going to have a stop. And you might not have to put that stop order in the market, but you have a defined area. You know where you're going to place that stop. and the market starts moving its way towards your stop, and you just move it away a few ticks. And then you move it away a few ticks more, and then you cancel it all the way out. The next thing you know, you're upside down in a trade, and the trade's totally working against you, and you're just asking yourself, why the heck did I do that? Why did I not take that stop? I should have just been out of it. It would have been a very small loss. And it's just one of those things that people do. So let's have a show of hands real quick. Who's ever moved a stop order? Had a stop in, went in with a trade. I'll raise my hand. Put an order in, had a stop there, and then adjusted that stop to try to let the rate work. That's right. I mean, it's just something that we do, and it's a big mistake. We got to learn to keep ourselves from doing that. Before we get any further, Tio was asking if anyone is speaking, and yes, I am speaking. And if you can, I just get a quick sound check. Who can hear me? You can hear and see me, okay? I did an audio check before we started. Okay, let me just type a note in here for Tio real quick. Need to clear your browser cache and then log out of the room and then log back in. And if you don't clear your cache, sometimes you can have some issues with the audio and video presentation. So yeah, of course, I think probably every trader out there at one point or another has messed with their trade, and usually ended up in some pain because of it. The problem is, on that rare occasion, and it's not the norm, but on those rare occasions where you mess with that trade and it works, you kind of pat yourself on the back subconsciously, and you're proud of yourself. Well, that just reinforces a bad habit, and this is a biggie. So let's just talk about this a little bit. Some traders hold on to losing positions far too long, thinking or hoping that the market will turn around and eventually turn their losing trade into a winner. When in actuality, most newbie traders would not have the patience to let that loser turn into a winner even if the market had turned around. What I mean by that, that same person that adjusted that stop down to give it room, the trade starts working, but as soon as it gets back near break even, they then take their loss, probably right around where they would have taken their first stop out anyway, and then the trade typically, you know, would go on and they'd never enjoy the profits. So that's what I mean. I mean, I see this, and I talk to traders, and I hear from traders, and I know this is what happens out there. When you open a trade, you actually can set a stop-loss order. And for those of you that are new, that's a point where the market will automatically close you out of your position if that price level is touched. It keeps your small losses from turning into big losses or even blown accounts. And every trader that I've talked to that's had success, they did some of these things early in their trading career. So if a lot of these things are speaking to you tonight, don't think that they have to keep doing them. I will tell you this, if you don't stop doing them, eventually you're going to run out of money because you're going to keep losing and your equity curve is going to keep dwindling. So you have to make a change in your trading, but most traders that have success had to have, you know, some skinned knees along the way, and they did make some mistakes. It's just how quickly can you correct those mistakes and get on the right side of your equity curve. I talk in my room about the trader typically go through a spectrum that goes from big losers to little losers to breaking even to small winners. If you've made it out of the big loser category and you're in that small loser category, or if you're in that small loser category into the break-even category, there's usually only a few minor degrees difference you need to make in your trading to get yourself from that slightly losing to break-even to slightly winning. And if you're fortunate enough to be one of these traders that's in the slightly winning category the most of the time in your trading, we are very close to having you become a breakout trader to where you can then start making big money. It's not a whole lot of difference between being a big loser and a big winner. Most of it has to do with technique and discipline and controlling your mind and having a plan of action. So depending on where you are in your trading career, we can get you across that spectrum. And if we can get you to where you're breaking even or making small winners you're right there on the cusp of really becoming a success in this industry. So hold on to that. If you're down in that big loser category, I would suggest you're probably doing a lot of these things that I'm talking about here tonight. Lack of trade management. The trading plan should have all the details specifically defined on when and where to take profits throughout the trade and how to adjust your stops accordingly. What I mean by this is, just because you get the entry, that's just one part of it. That's a very small part about it. You want to have a high probability plan that gives you very high probability entries, but it's being able to manage that money after you're in the trade, taking off a couple of quick profit targets to get yourself to where even if the runner doesn't work out and gets stopped out, you still made a little bit on the trade, or you've gotten yourself to a point where it's very little risk on the overall trade. So trade management, taking partial profits along the way, is very important. And a lot of teachers don't teach it properly, and a lot of traders don't even know how to attempt to go about it. So you have to have a specific plan for taking profits along the way. It's not an all or nothing swing for the fences, home run every time we're at bat. It's a singles and doubles and trading consistently over time that's going to allow you to win at this game. So prior to entering a trade, the full risk-reward profile of the entry should be understood and accepted. There should be no ambiguity on how to take partial profits along the way and when and where to re-enter a trade that's working. Over at Newbie Trader, for our various trading techniques, and I'm going to go over the tool here in a minute, but we have basically 3 different types of entries. We have what we call our conservative entry and our aggressive entry. They're the exact same type of entries, they're just a different area along the spectrum that we get into the trade. I'm going to talk to you about some what we call a fractal rotation here in a minute. And the aggressive entry is just getting in the trade on that first fractal rotation. And the conservative is waiting for that first rotation to be complete and getting in on the second position. So we have what we call a conservative and an aggressive, and then we have an alternative entry that doesn't require the fractal to be a certain direction. So we have 3 different types of trade entries, and they all have their very specific rule sets that the computer keeps track of for you, and they have the filters that the computer keeps track for you to allow you to trade. But once you have a trade on, we also have very specific rules for how we take profits, and we also have very specific rules for how we trail our stops, and we also have very specific rules for how we enter a secondary or tertiary trade. And we'll show you some of those here in a little bit, and time permitting, we'll also go to the live charts, and I'll show you some recent price action on a couple of the markets here. So newbie traders will often exit a trade when it feels right or wrong, not when their system is telling them they should be getting in or out of the trade. Another one is this lack of patience and discipline. I see this all the time. You have a specific entry. You have a level that you're supposed to wait for the market maybe to come to if you're taking a limit order into the market, or maybe an order that it needs to break through before you take a position maybe that you're carrying into the market. But because I guess traders in general suffer from ADD, I don't know, you feel like you need to do something, you're called a trader, and if you're trading futures and you're trading during the day, people have told you you're a day trader, and you think, well, my goodness, I'm a day trader, I'm supposed to be trading. People don't tell you going into this business, the money is made in the wait. To be a good trader, you have to have superior patience, and you have to have discipline to wait for that setup. Most of your day is sitting around doing nothing. You're looking at a few different charts and whatnot, you're waiting for the setup. Those setups come, and you have to be able to react. You have to have a strong mind, you have to have strong discipline, you have to have a strong will, and you have to have the confidence to take the trade. But those trades aren't happening all the time. Now it depends on your plan. If you're watching multiple markets, and you know, which you can with this tool, yeah, you can be very active, but for the most part, the patience and discipline you show is where the money is made in trading. Waiting for that setup, not rushing into an entry early only to take undue heat in a trade, and then you start adjusting your stop because you say, well, Yeah, my stop's here, but it should have been here had I waited for the right spot, so I'm just going to give it a little. You've just totally ruined the probabilities of your system. You've thrown them out the window. Any back testing you did prior to starting to trade this way, out the window. So if you're disciplined and stick with a tested trading plan consistently, you will more often than not profit over those who trade inconsistently. You should plan your trades and trade your plan. We've all heard this. Entering or exiting a trade early can be just as devastating to your account as gambling. Just flip a coin and getting in. Without the patience to let the trade work, you will never be able to establish your trading plan's true probability of success. And lastly, let's talk about revenge and overtrading. Revenge trading is when you get emotional over a lost trade and try to aggressively recapture that loss. Show of hands. How many people on this webinar, my hand's up, how many people have been in a trade that maybe they shouldn't have been in, they've taken a very quick stop out and lost, and you pushed the button and quickly got right back into that position because you wanted to be right and you wanted to show the market that you were right, and you didn't want to listen to the market tell you that you were wrong or you would have been stopped out to begin with. Yeah. We make a bad trade, or we make a bad decision, or we make a right decision and the market tells us we're wrong, and then we just jump right back in and put ourselves under a double whammy. Of course. It's something that traders do early in their career. Some do it late in their career, and they end up not having a career. But it's one of those things that you need to correct and overcome. Of course we do it. We just need to eliminate these bad habits. And these 5 things, if you can knock out these 5 things, you've already put yourself at a huge advantage over a good portion of the marketplace. When we do this in gambling, it's often known as doubling down. While it may be difficult, it's always best to accept the loss outright and not let your ego for being right dig you into a bigger hole. Instead of revenge trading, maybe you should focus your efforts and energy on studying what went wrong and figure out if you made a mistake in the execution of your trading plan.